Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is November 4, 2023, Saturday. As always, in the weekends, we put global markets, commodities, currencies, and Brent and NYMEX, dollars, Brent and NYMEX, that is oil, and US 10-year treasury yield. So we divide into three parts. Part one is the indices, that is Dow, Nasdaq, S&P FTSE, and CBOE VIX. And in part 2, we cover dollar index and its components, and of course USD INR, though it is not part of it. And in part 3, we cover US 10-year treasury yield, Brent and NYMEX. Okay, so this is for the week. What we are going to cover, though we'll be touching upon the week, but we'll be more covering from a monthly perspective, and what happened in the 3 days of this month also we'll cover. But primarily we'll touch upon the week of October 30, Monday, till November 3, 2023, Friday. But we'll cover what happened in October, what had happened in the 3 days of November, what we said last week, everything we'll cover. So October, in the month of October, it closed, Dow closed 1.5%, 2.8% Nasdaq down, S&P down 2.2%, and FTSE down 3.8%. So this week, that is yesterday, how it closed. So Dow closed 34,061.32, Nasdaq closed 13,478.28, and S&P closed 4,358.34, FTSE closed 7,417.73. In this week alone, Dow has moved up by 5.1%, S&P 6.6%, Nasdaq 6.6%, and S&P 6%, while FTSE is up by 1.7%. In this month alone, in this month meaning November, in just 3 trading sessions, Dow has gone up by 3.1%, Nasdaq 4.9%, S&P 3.9%, and FTSE by 1.3%. So you can see what had happened. If you recollect, last week we said that solid red candle, it formed a closing below the Bollinger lower band in the weekly chart. We had clearly said that the risk to reward is not favoring anyone being bearish at these levels, and in fact they will be trapped. That is what we had said. Precisely that is what had happened. Starting Monday of this week, that is on October 30 onwards, markets started going up. But still in the monthly chart, all these 3 indices, I will cover FTSE differently, because all 3 indices, that is Dow, Nasdaq and S&P, formed similar candle. It formed a small red candle. You can't call it as a spinning top, you can't call it as a doji, but you can't call it as a very big red candle. That's why you can see in the percentage of fall also, right? It's around 2% fall. It was the third candle in succession it formed a red candle. Normally we had said, those who are following my videos will know that we are here to give technical analysis education. So we had said that in technical analysis parlance, normally what happens, rising three methods and falling three methods are very powerful short covering rallies. So after 3 downfall red candles, we had said that next month is going to be a green candle. That is in the month of November. That is what had happened. Second, Bollinger lower band, 2 candles. It's not like, no, there is no, it's not a theorem, mathematical theorem. No, after 2 candles or 3 candles or 4 candles, it has to happen. It can happen anytime, but normally when market goes in straight line down, there is a short covering rally that is possible. And when it goes straight line up, there is a short covering, there is a pullback that is possible. So that is what had happened. So what happened in the monthly chart, in the 3 days itself, it has formed a powerful green candle. And in fact, in the daily, because of such a massive move in the last 5 days, from just the lower band, it has gone all the way to Bollinger upper band. Nearly it has covered 1000 points, Nasdaq, Dow. And Nasdaq and S&P also moved sizably. You can see that 3%, 4% rise means you can proportionately see around 1200 points in Nasdaq. So that such a move is what had happened. Because of such a move, now in the daily chart, all these 3 indices are well above all the key averages. When I say all the key averages, above 50-day, above 200-day, simple moving average and exponential moving average. The only challenge that it faces in the daily chart is the 100-day moving average, which is slightly above the Bollinger upper band. From lower band last weekend, Friday, it is now near the Bollinger upper band and near the 100-day moving average. As far as weekly is concerned, it is above all the moving averages, exponential moving averages. Monthly, it was near the Bollinger middle band. Now it has significantly taken it up. And with this move, we can expect a significant up move during the month end, and also Christmas rally is also very much possible. So such a powerful up move is possible in all these indices. Particularly Dow is showing more promise because the high of October is taken out already in the 3 days, which means there is very limited downfall in this month. That's very clear. FTSE on the other hand, it formed a solid red candle, no doubt, but it has formed, it is also showing a revival. And FTSE in this calendar year is just flat, 0.42% down, while Nasdaq and Dow is up respectively 28 and 14%. Nasdaq and S&P, Dow is up around 2.5%. So with these things, FTSE is also looking, if you recollect in the last 2 months before itself video, we had said that FTSE, if it forms sideways this year, most likely it is going to form this way. Either it is going to go up significantly or it will form sideways. That means it will more or less close at the same levels for the calendar year. Then what will happen? 2024 is going to be a year of FTSE. That is what we had said. We still maintain it. CBOE VIX on the other hand, CBOE VIX is more or less flat, I would say. It is at 14.8 in this week. Last week it formed doji. This week it formed a red candle and it came down. And in the monthly, it formed a doji in the month. We had said that it is going to form doji in October, after which it has now formed a evening star. It's a combination of 3 candles. So because it has formed an evening star, it is decisively down in the daily chart also, but we still maintain our position that the 11 levels, around 11, 10.5 to 11, that is a very strong support for CBOE VIX, and it is not going to break below that level. Thank you very much.